Welcome to the midweek market update at Wealthy Bucket. This video is designed to gauge our Bucket weekly market forecast that we send out to our premium members each and every week. As we know, the industry and the people that participate in the industry, the retail investors, they're pretty fickle when it comes to performance. They say, well, sometimes you're good, sometimes you're not. And you're only as good as your last trade or your last week, and people have faith in you when you're on, and people don't have faith in you when you're not on, and that's the business that we seem to be in. It's just how much are you on versus how much you are not on, meaning are you right more of the times than you are not. And if you've been following our Bucket weekly market forecast for 2 months, 6 months, 8 months, 12 months, 15 months, whatever it is that you've been following us, then you'll know that we're on more than we're not. And the last week and this week is really no different. We've been on for the last 3 weeks, so to speak, and that is due large in part to the way we analyze the markets. Like, how do we see the markets? And you may find a lot of companies or a lot of education providers on the internet that say, well, our indicator does this and our indicator does that. Well, we don't really have a technical indicator, so to speak. We're using the market as our indicator, and that is the truest and most accurate indicator if you understand what to look for. Someone once said to us that, well, your service I don't see the value in it. Well, it's probably because you don't understand it, or they didn't understand how to use it to their benefit. They didn't look into the research long enough. They didn't give it enough time. They wanted their financial future to change overnight. They wanted to trade probably, or look for as many trades as possible, and that's probably the wrong approach. It's all about managing your risk, so to speak. And managing your risk, if you watched our video yesterday, managing your risk has nothing to do with how much money I'm going to lose, so to speak. It's what forces are out there that are going to turn my trade against me. And knowing what those forces are and how to play within those forces or not play within those forces is going to be the key to your success. And yesterday we talked about how we expect further downside in the S&P 500. What you're looking at right now is the S&P futures, but let's zoom in to the S&P 500 from today to get an idea of what I'm talking about. Here we have yesterday. We talked about it yesterday, how we expect the market to come down into our level. Because the Dow was in its level, the NASDAQ hadn't traded into its immediate support levels. So we're expecting more downdrafts, so to speak, in the markets. And if anyone thinks that all these asset classes that we use don't work in unison or don't have a relationship, you need to get your head checked. And what we're looking at, and yesterday we called it out, saying we expect further downside. Yes, the S&P 500 closed up a whopping 0.12 points today. However, you can see that the S&P did in fact finally trade. It traded into our level. And for the past 2 weeks or 3 weeks, we said, if you're going to trade, they better be short-term trades, because whatever you can make today can be gone tomorrow. Yes, the market has closed down, or it has traded lower in the last couple of days because it hasn't made back its loss. We have Monday here, so the open on Monday was 1978 and a quarter. and we're now at 1970. It's down 8 points. It's not a whole lot. As you can see, the market really hasn't moved. And we've been calling for that. If you've been following and reading our analysis in our Bucket Weekly forecast, because of the way the currencies were performing. Now, minus what had happened in the yen this week, simply because of local economics, and we did warn you of that the multi-asset investment model would not be entirely accurate this week based on what we expect the yen to do. And the yen did exactly what we expected to do. The forecast itself was accurate because the yen was still prior to the release of the data saying that, well, our unemployment ticked up, meaning there's more people unemployed, out of work, and our retail sales numbers, which means people are spending less money, is bad. It's poor. The numbers are decreasing, and that's causing a drawdown on the currency. However, that extraordinary information aside, you cannot discount the fact that people were buying into the yen. And historically, when people buy into the yen, you get a pullback in the equity markets. So, and because of the smaller and smaller pivot highs and pivot lows, because of that behavior, we were calling for smaller and smaller trading ranges within the S&P. And that was 3 weeks ago. Okay, that was back in the beginning of July. And look what happened. We're not being reactive to the market. We're actually being proactive to the market. And as a successful investor or trader, you need to be able to anticipate the move, not trade off of some indicator that the move has already happened. And well, I'm gonna wait for my indicator to give me confirmation that this is happening. No, you can't trade that way. If you always trade that way, you're going to be late. You got to understand or want to understand what the market is actually saying to you. Is it saying because of the other forces, because of the currency markets, because of the commodity markets, is the market going to trade sideways? And because of those factors, if certain currencies aren't moving and they're not moving in enough direction, you're not going to get enough direction in the equity markets. And if you know that, and you know that because we've told you that, then you can better prepare your trades or your trading ideas during that period of no direction. You have two choices to make. Either one, I'm going to trade on a very short-term basis, or two, I'm not going to trade at all until the market makes a direction or is decisive in a direction, which means it'll continue upwards or it'll continue downwards. Right now, it's not continuing in any direction. And if you're stuck in your ways, meaning, oh, well, I'm a swing trader, or I'm a long-term investor, or whatever you want to call yourselves, if you're stuck in your bias, you can't adapt to the current market conditions. And if you can't adapt to the current market conditions, you're going to lose money. And this is why we forecast each and every week so that we prepare everybody. And as you can see, the S&P has now traded into the immediate support level. So how is the rest of the market, or how do we play out the rest of the week? Well, let's take a look at the Dow. And the risk in the Dow right now is it's currently trading in its immediate support levels. We need the Dow to at least rally away and close above this immediate support levels. If it continues to trade within this band, then you still know that you're taking short-term trades. And that would be based on what the yen is going to do, and I'll talk about that momentarily. If the Dow closes below this level, meaning the 16,855.60 level, if it closes below that, do you believe that the S&P 500 is going to move in the opposite direction, which is up? It's impossible. If the Dow closes below its immediate support level, because it's only 30 stocks, the S&P may not close below its level, but it will close into its level. And if the Dow closes below, you can see how much room there is for the Dow to fall. That's a pretty significant move. And if the Dow closes below this level, then it would be ideal as we had forecasted, so that to make sure that when you are entering into positions that you have both long and short. If you're all bullish and you're all long stock or whatever that may be, your risk is 100%. You're going to be all on the wrong side of the market. So knowing that and understanding these levels that we create for you, because you can't even write a better script. Look at today. Look at the yen. It drifted right into our level and then rallied out of it. We're not using support and resistance, as you can see here. And normal and typical traders will say, well, there's support here, and then there's some support here, and then there's some support here. Look, the holy grail of trading is, am I on the right side of the market? First and foremost. Second, the holy grail is, well, what stock should I be trading? If I can find the opportunity, I can make money. Wrong. Just because you can find the opportunity does not mean you're going to make money. You could be a great stock picker and still lose money. It's how do you allow yourself and how do you look at the market so that you can learn to let your winners run. If you understand these levels, go watch our videos. If you understand how to see these levels, then you can learn to let the trades and the markets run to its full potential. And if you have that skill, you are now self-sufficient. And this is the point. This is our story. This is the reason why we go through these exercises each and every week. Not just so that we can pick stocks. Anyone can just sit there and pick stocks. Your grandmother can pick stocks. It's how far will the market go? That's the holy grail. You figure that out, you got it. You don't figure that out, you're going to be looking for help over and over and over again. And we're here to stop that. So, long story short, going into the rest of the week, until the Japanese yen actually pivots back out, meaning upwards, and recalibrates, which means all moves that may be irrational, may be seen as irrational, are always corrected. We need the move to be corrected so that we can properly correlate all of our markets. And when we can do that, we have a high probable outcome once we can correlate the markets. So going into the last two trading sessions of the week, we need to figure out now what is going to happen tomorrow. If you're going to trade, it's going to be short term. We need to wait, or we shouldn't say you need to. You should want to wait for the yen to normalize before we can reposition ourselves. Remember, you're not a market maker. You don't have to be in the market all the time. What you need to do or want to do is understand what the market is doing so that you can play your chips properly. So the theme now is, if going into the last day, it's not, if you haven't taken a trade already this week because the markets are sitting in their levels, you probably don't want to just randomly take a trade this right now, go on a Thursday or a Friday. You probably want to wait till Monday and see what happens or how the markets close out for the week. We did provide our trades already. If you haven't gotten to them, it's probably too late. Don't take them out. And the rest of the week, if you're going to get into a trade, if you have to, if you feel you have to, you're going to get into a very, very short-term trade because you want to see if there's more downward pressure on the Dow. If the Dow drifts, it tested it once, if it drifts again below this level and closes below it, okay, if it closes below it, then we're going to have further downside. If the Dow closes below this level, then we're expecting the Dow to travel down to about 16,606. If that happens, we're expecting the S&P to travel down to, it may hang around, we talked about this 2 weeks ago, the 1940 level. And after the 1940 level, if that doesn't hold, then we're looking at a larger move down to this 1914. However, we need to see and wait for the Japanese yen to recalibrate, to normalize, so to speak, because if this ascending triangle starts to complete itself again and we get a retest of this major resistance level, then we're going to see further downside pressure in the equity markets. And that's what you want to look for going into the last 2 days of the trading week. Currently, the S&P futures are trading down 2 points. Okay, if we get a close into this level here, again, it's critical that you have some short trades pending and ready to go. If you don't have any, we'll find some for you this weekend. The Dow currently trading over in Asia is trading into its level. It's down 12 points, as you can see here. If by the time you wake up in the morning, if we're below this level at 16,753, I mean, that's a big move overnight, then we're going to have more problems going into the morning, and we could see further downside risk. And if you haven't positioned yourself, it's probably best that you do. I mean, we said that last week, and this week it's best to position yourself for short trades in the event that the Japanese yen continues to move higher. Now we need to see the Japanese yen retrace this move, get back in regular behavior, and then we can recalibrate this market. As always, if you have any questions, email us at service@wealthybucket.com. We'll be glad to answer your questions. And if you don't see the value for whatever reason, then you shouldn't be a member. If you have any questions about how to perceive the information that we provided in our trading model, you got to send us questions. Watch the videos in the member resource area that we offered to you, and watch that. That way you can understand how we arrive at these conclusions. And again, you're only as good as your last trade, but check out our last 16, 17 months of our performance, and that alone speaks for itself. We hope you had a great week, and we thank you for stopping by the Wealthy Bucket.